Hey, what's going on, guys? I want to give you a quick update on what we're seeing happen and what's going on in the real estate market, but more specifically, what's happening in the economy and how is that influencing interest rates, which is therefore influencing the housing market. So we saw on Good Friday, the Federal Reserve's quantitative tightening is starting to curb inflation. It's putting the brakes on it. You know, we've been from red hot in the labor market to it's slowing down some. We saw the numbers come in where non-farm payroll employment rose by 236,000 homes, which was a little bit lower than expectation of 239, which is good. We were anticipating it to be a little bit higher. It's slowing down a little bit more. Same thing with the unemployment rate. It's at 3.5%. It was expected to be at 3.6%, which is helping. And then we're seeing the same thing happen in other areas of the economy. We're starting to see that economy slow down a little bit, which is beginning to stabilize interest rates and see them decrease a little bit. We saw that the 30-year fixed rate mortgage from Freddie Mac was an average of 6.28%, and that's what they came out with. So that's showing a little bit of decline. We were as high as 7.25 earlier this year, and we've seen that stabilize. What we've seen that stabilization do in interest rates is we've seen the housing market pick up. Month over month from February to March, we saw the market and activity in the market increase by 0.16%, which doesn't seem like a lot, and it's not a ton, but it is enough to show that when interest rates stabilize and people get used to that higher interest rate than what we've seen the past 2 or 3 years, and then whenever we see it decline a little bit, more and more buyers come into the market. You know, first-time home buyers are some of the people who are starting to see this and feel this the most as they're trying to jump into the market. They're seeing affordability be tough. They're seeing that whenever the interest rates come down, that they need to jump into the market before a lot of other buyers do. And, you know, we're just not seeing a lot of inventory. Again, that interest rate insulation, which is keeping people in their homes, not making them move, is going to continue to decrease the inventory throughout this year. I think if interest rates come down at all, everybody is anticipating market's going to be more and more aggressive, especially in the desirable areas like the Denver metro area. That's what I got today, guys. Have a good one.